Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remains somewhat stable against the US dollar after the Australian inflation report came out, which was as expected at 3.4% year on year. Looking to Thursday, we also found there was a little bit more to the hawkish side when it comes to comments from US Federal Reserve Governor Christopher Waller. He emphasised the need for higher interest rates and further inflation progress before considering a rate cut. However, many are foreseeing an easing cut of at least 3 this year, with all eyes now turning to the US consumer spending before Friday's release of the Personal Consumption Expenditure Price Index, or the PCE, which is the Fed's preferred inflation gauge. As market participants await for the reports, insights and potential policy implications, a rate cut is anticipated in June, with some even considering it at next week's meeting. Looking ahead, market bulls remain optimistic and therefore could see the move up towards this 60-day moving average around 66 cents. In the broader sense though, as the indicators are firming up, we could see beyond 66 and look towards 67 cents, with the base holding around 64.80. It was seen the euro has found a bit of support at the New York close as we look towards Thursday, with the resistance seen around 108.55. It is still anticipated the bulls will eventually take the market higher on towards 109 to 110, and with the base holding around 107.70. The market might find a little bit of thin liquidity as we are going into the short week, with the holiday period about to commence for Easter. The markets will be closed for Good Friday. The Japanese yen still remains in intervention territory as traders look around that region of 151.50.80. We can see from a closer look that we've got an engulfing candle and therefore could see further downside potential when we see a break of 150.5. If breached, the market should find further weakness towards the lows of 149. Meanwhile, the Bank of Japan reversal of monetary policy tightening in March didn't stop the yen's weakening trend. And with on Wednesday, we got to the highs close to 152, which was last seen around the 1990s. Looking back there prompted the BOJ to intervene and followed by a sharp downturn. With many still expecting this to occur, upside attempts should fail around that level of 151.75 to 80, and therefore let's see if we can get a break of 150.5, which should see that downside move as suggested. A little bit firmer when it comes to the sterling, with the market looking still towards that highs of 126 and on towards 128. With any weakness, still should find support around the lows of 125.5. A stronger move when it comes to gold overnight, and the market still holds steadily as it looks towards the 2,200 mark. Anywhere from there to 2,214 may find profit taking, as it does coincide with the bearish spinning top. With that being said, a neutral view is beyond 2014 as the market will find much volatility and we could see very high whipsaw price action due to volume being light, considering we're heading in towards the Fed's preferred inflation data and also the Easter period. Any rejection from there looks back towards the region of 2,170 to 72. A rebound in oil puts it back on focus of that $83 mark, but still, as I said yesterday, we're still likely to be confined to a $79.80 to an $83 mark due to the fact that the technicals are somewhat lackluster. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the